Welcome to Femobite Advisors. This is your complete guide to setting up a UAE LLC as an Indian entrepreneur, covering tax efficiency, market access, asset protection, and the FEMA obligations back in India. 5 things to know upfront. A UAE LLC gives you full mainland market access. Free zones need a local distributor to do the same. UAE tax is 0% up to AED 3,75,000 and just 9% above that, versus India's 25 to 30%. Your personal assets are protected, liability stays capped at your capital contribution, you can own 100%, no local partner required in most sectors, and choosing the wrong structure now means expensive restructuring later. What is a UAE LLC? A UAE LLC is a mainland entity under Federal Decree Law 32 of 2021. 3 options exist: free zone, which limits mainland trading; branch office, which has no legal separation from your Indian entity; and the LLC with a mainland license, the recommended option, a standalone UAE entity with full market access and clean legal separation. Tax efficiency. The numbers speak for themselves. On AED 1 million profit, UAE taxes AED 56,250. India's equivalent is AED 300,000. Annual saving AED 2,43,750. On AED 5 million, saving exceeds AED 1 million. On top of that, 0 personal income tax, 0 capital gains tax, 0 withholding on dividends, and unrestricted profit repatriation to India. Market access. A UAE mainland LLC trades directly with businesses, residents, and government entities across all 7 emirates. No distributors, no margin compression. Direct B2B and B2G relationships. India-UAE bilateral trade hit $101.25 billion in FY 2025-26. The joint target is $200 billion by 2032. There are 247,000 plus active Indian business licenses in the UAE already, and over 2,000 licensable activities available. Asset protection. Personal liability is capped at your capital contribution. Personal savings and property are protected. Under the 2021 Commercial Companies Law, Indian entrepreneurs can own 100% of a UAE LLC in most sectors. Only 7 restricted sectors require a UAE national partner: security and defense, banking, fisheries, telecom, HUD services, currency printing, and commercial agents. Everything else 100% Indian ownership, permitted by default. Most Indian entrepreneurs default to a free zone because it's cheaper upfront, but free zones cannot trade directly in the UAE mainland. Restructuring later means liquidation fees, re-registration costs, visa cancellations, and lost contracts during transition. Operating outside your license structure risks suspensions, fines, and government blacklisting. Harder to manage from India. Get the structure right from day one. With correct documentation, a UAE LLC is registered in 4 to 10 business days. Day 1 to 2, trade name and initial approval. Day 2 to 4, MOA, notarization and activity approvals. Day 4 to 7, Ejari office lease. Day 7 to 10, license issuance and tax registration. Track 3 milestones post setup. At 90 days, confirm license scope. At year 1, verify tax compliance, and at renewal, confirm your market strategy runs through the LLC. Documents needed: passport copies, address proof, notarized MOA, trade name certificate, Department of Economy approval, Ejari lease, NOC if on a UAE employer visa, and corporate tax and VAT registration. No strict minimum capital. AED 1,50,000 is the common benchmark. The India-UAE DTAA protects you from being taxed twice across both countries. 3 compounding advantages: better tax, full market access, and personal asset protection. These work only when the structure is correct and the right activities are licensed, and compliance is maintained from day one. Femobite Advisors handles both sides, UAE LLC formation and India side FEMA and RBI compliance. Call us at 9933385556 or 04048503467. Email services@femobite.com. Visit femobite.com. Don't guess with FEMA. Choose Femobite Advisors.